So, good afternoon, everybody. I am Panos Mitrou from Lloyd Register. I'm the gas segment manager for Lloyd Register, and I will be moderating a session on the green future of shipping, the future of green shipping. So today with us we have Arthur Richier, a senior freight analyst from Vortexa, and Charlotte Bucchioni from S&P Global Platts, who will elaborate on the subject. We will then have the chance to discuss on some key topics regarding the future of green shipping, having decarbonization under the spotlight. So we will now start with Arthur. So Arthur will be presenting on the green future of shipping and what shipping will look like in the decades to come. So Arthur, the floor is yours. Arthur, can you hear me? Can you please unmute?
Sorry there.
Yeah, all right, that's nice.
Great stuff. All right, I'll start again.
Yeah.
Cheers, Panos, for the introduction. So my name is Arthur, and I'm a senior freight analyst at Vortexa, and I'm very excited to kickstart this panel on the future of green shipping. First of all, let's take a look at the agenda. I'm going to start by introducing Vortexa, and then I'll remind the audience of the IMO goals that the shipping industry is facing when it comes to decarbonization. We'll then take a look at two case studies in order to highlight the challenges and potential solutions available to our shipping market participants. And then we'll conclude the presentation. So a short introduction to Vortexa. We're an analytics provider for the oil and gas industry that produces real-time global detail waterborne cargo flows. And by blending our AI-driven models, as well as human intelligence from our market analysts, we're able to provide you with the most complete set of energy waterborne cargo movements in the industry today. And we're used by a number of players in the industry to that effect, to get a forward-looking market view. So you'll see examples of our data throughout the presentation. But let's look at the decarbonization of shipping. So small reminder, on the left-hand side, you'll have the goals that the IMO has set for the shipping industry. Now, these include a reduction of greenhouse gas emissions of 50% by 2050, as well as a reduction of carbon intensity of those same emissions, respectively by 40 and 70% for 2030 and 2050. Now, that compares to 2008 levels. These goals are ambitious, but ambition is what you need when tackling a problem of this scale. So what must the industry aim for? Well, it needs to be aligned when it comes to global regulations. And as I'm sure many policymakers in this virtual conference with us today would agree, that it's something that's really not easy to do. If we look at the scrubbers, for example, some ports have banned them, others haven't. It lacks an industry coordination there. We're really going to have to focus on cross-sector research and development. And that means the industry committing all across the supply chain. Whatever solution is needed, we're going to have to scale up the fuel production if an alternative fuel is the way to go, and then match that by scaling up the bunkering infrastructure. there was a very comprehensive report by Shell that came out, which estimated the total cost of the decarbonization of shipping by 1.65 trillion by 2050. So by no means are these small numbers. Let's now look at the challenges that are really specific to the shipping industry. Well, it's a very capital intensive industry. You're looking at upwards of $100 million for a new build, very large crude carrier. These vessels trade for 20 to 30 years. Change is very slow to enact, and it's not easy to change the ones already on the water. Right now, bunker fuels, in other words, polluting fuels, are the industry standard, and there isn't a clear-cut alternative. So there are some alternatives, which we'll look at later. And the global industry lacks that global coordination and infrastructure. So some of the solutions that have been proposed that we are aware of, that we're looking into, we have the scrubbers. Now, scrubbers came in as a response to the IMO 2020 regulations that made the industry move and switch towards fuels with a lower sulfur content. As we'll see, it's maybe too little too late. The majority of the fleet hasn't decided to adopt that option. And actually, we now know that you still emit more greenhouse gases with a lower sulfur fuel than with a higher sulfur fuel with a scrubber. So this, whether that has worked or not, whether this is the long-term solution, probably not. When it comes to alternative shipping fuels, it begs the questions of the availability. Are we producing enough of them? Is it worth really pushing forwards in order to produce more? Considering that is also going to put a strain on our resources and necessitate a tremendous amount of investment. The International Chamber of Shipping has looked into a research and development fund for the industry and is trying to raise $5 billion. Now, if we looked at the previous estimate, which is 33 times that amount, are we committing enough funds to this? And once more, we need to put really the focus on the fact the industry has to be united in order to tackle this. So let's look at our first case study. At Vortexa here, we track the global tanker fleet with regards to oil and gas carriers. On the right-hand side here, you have a screenshot of our map screen within our Vortexa software. So we track today about 11,000 vessels. Now, keep in mind, these are only oil and gas carriers. You have about roughly the same amount in terms of dry bulk carriers, and maybe 20 to 25,000 other vessels. In these, you have your container ships, your cruise liners, your general cargo ships, etc. Now, if we look on the left-hand side, I want to bring your attention to two data sets. The first one concerns the scrubber non-scrubber split. As you can see, only 9% of the fleet is equipped with scrubbers. The recent pandemic has actually kind of put a halt to these scrubber installations. So that's not going to increase in the near term. When it comes to the second point, and that's one I really want to bring your attention to, it's the age profile of this global fleet. Now, if you consider the trading, active trading period of these vessels to be around 20 years, well, you know, by 2030, we'll have potentially 55% of these vessels are going to be replaced. And by 2050, we can imagine that none of the tankers we see today might still be operating then, once more if we use that 20-year as a baseline. And maybe here we need to take a step back actually from the entire industry and ask yourselves this: what is the commodity of the future? What is the energy commodity of the future that's going to be transported by 2050? Well, it's probably not going to be crude oil. And if it is, it probably won't be in the measures that we see today. Whether it'll be hydrogen, LNG, you know, this is open for debate, but maybe the solution to the decarbonization of shipping goes through the extinction of the current crude and refined product carrier fleet. Let's take a look at LNG fuel tankers. Personally, I'm a big fan of them. I think whereas not a final solution, it can really help be a transitional solution. For example, there's great partnerships in the industry between, for example, the aforementioned Shell and a Russian carrier called Sovcomflot. So here you can see one of the LNG-fueled Aframax tankers. In this case, in the case of LNG, it would be easier to develop a global bunkering infrastructure, as you can latch on those that infrastructure to existing LNG terminal facilities. And let's keep in mind that even though gas is a fossil fuel, it emits a lot less than the heavy bunker fuels currently used in the industry. So it would help towards the progression of our goals of reducing greenhouse gas emissions. Now, when it comes to alternative fuels, the question is, do we have enough available? Currently, the industry standard is fuel oil. At Vortexa here, we track the cargo flows data for in-transit volume on a barrels per day basis. As you can see, LNG has really started in the last 3 years to be produced at a scale where there is now more of it on the water than fuel oil, which would fit kind of one of our first criteria for alternative fuels, which is its availability. And really, since the beginning of the year, probably supported by the current pandemic and the kind of destruction of demand, LNG is now firmly one step ahead of fuel oil when it comes to these volumes. That's not to say you don't have any other options, such as ammonia, methanol, or hydrogen as well, which is really being touted as the fuel of the future, which is really great because it can also be used from carbon capture. So that's something we can discuss as well. Ammonia global production levels are still very low compared to the tons of fuel oil discharge. But that also would be an option, as it is a carbon neutral fuel. Now, what are the limitations? Well, low energy density for a lot of the above, meaning you would have to carry a lot more to have the same energetic output compared to fuel. We've previously mentioned the lack of infrastructure and the availability, and also storage and safety requirements. No one would want to repeat of the disaster that struck Lebanon earlier this year. And unfortunately, we have to be a lot more careful with some of these options than the previous ones. So what's our verdict? Well, the industry is ready, sort of. There is market demand. You do have regulatory incentives, and we have the technological capability. This is a quote from the aforementioned Shell report from a shipping operator that says, "We can build rockets that come back from the moon, but not make ships green. And maybe scientists should stop focusing on making square watermelons and instead of really looking to solving some of the climate challenges we have today. Because today as well, the reality is that we don't have a clear alignment on solutions. It's going to be very difficult to replace all these assets and to create that infrastructure. And also, ultimately, the question is who is going to foot the bill, meaning who is going to pay for all of this." That concludes my presentation. If you have any questions or would like to reach out and discuss some of these points further, I'm happily available. So here's my email. Or if you'd like to request a demo as well of the Vortexa platform and the associated data, don't hesitate as well to send me an email. Thank you for listening.
Thank you, Arthur. That was quite enlightening and quite interesting, especially the comments on the additional expenditure needed or provide some sense of magnitude to the whole effort. And so we will now move on to Charlotte Bucchioni, the tankers editor for S&P Platts. And Charlotte will also cover the same subject. So Do we have Charlotte?
Okay, great. Thank you. Thank you very much for the introduction. So as Panos already kindly said, so I'm the editor for tankers at S&P Global Platts in London. Our team also focuses on dry bulk as well as LNG shipping and containers. So we cover quite the broad range of shipping alternatives as well, and therefore my presentation will be, despite focusing on tankers, also mentioning other shipping industries. So just to make a point about what the emissions of shipping represent, in the EU, we see that shipping accounts overall for 13% of overall greenhouse gas emissions from the transport sector, which is very considerable. And sustainability is very much a topic that shipping market participants have been discussing. Given the lifespan of tankers, as Arthur already mentioned, we are looking to something like 20 to 30 years. And given all these regulations that are coming in, it's quite important to really make sure you invest into the right solution. So in the agenda, we'll be speaking about policy, how to facilitate the dialogue between market participants, ensuring fair treatment for first movers, as well as economic viability, which is essential in a market, as well market. So second point will be innovation, new advances in fuel technology, as well as tanker technology, which is something that definitely needs a bit more research on. And finally, the role of pricing. So how information outlets can already provide pricing information regarding the different fuels that could be a potential solution. And so in this way, market participants can really understand what the cost of these options will be and be able to do their assessments of them. Right, so in terms of policy, what do we have in the agenda? We have the upcoming IMO 2030. It seems only yesterday that IMO 2020 was on everyone's mouth. However, given the developments with the coronavirus crisis as well as the bunkering industry, it seems that IMO 2020 wasn't much effective. As Arthur has already mentioned, the adoption rate was quite poor in terms of scrubbers, and 0.5% fuel oil is still emitting a lot of carbon. So it's a bit complicated if we are aiming to cut 50% of emissions based on 2008 levels by 2030, whereas now, according to the latest Traffic Oil White Paper, we are likely to see an increase of 130% basis 2008 levels. So we're definitely not going to the right direction, and we definitely need to be doing more in the industry to comply with the regulations that are coming. We also have the European Parliament, which is considering integrating shipping into the existing EU emissions trading system. And there were a few analyses that were already trying to understand the costs of this. And let's say for an Aframax tanker, which loads 600,000 barrels, we would see an increase of $4,000 per day if it was compliant with the EU emissions trading scheme, according to a Clarkson's report. So these are things that are definitely the agenda and something that market participants are really paying a lot of attention to. And what I think is useful here is really to think about ensuring fair treatment for the first movers. So we have many different alternatives. We are still unsure about which ones will be the ones that will be picked in terms of fuel, in terms of technology. And I want to draw attention to the scrubber index premium on the right-hand side. So this shows for the dry bulk sector how much, let's say, a scrubber-fitted ship was earning in addition to a non-scrubber fitted ship, basis the differences in bunker prices. And you can see that despite this being quite high at the beginning of the year, given how bunkers behaved with the coronavirus pandemic, the difference now is much shorter. It's much thinner. So we have to ensure that when some policies are being enacted, that those that have made the investments to have some to reduce their carbon footprint are taken into account. I think that this is something that I would really want to stress. And second of all is creating incentives on both sides. As was already mentioned, it's really a work that has to be done across the entire supply chain, and not only on ship owners, but also on the oil majors that chartered these vessels. And could be like could be also like for the dry bulk sector, same thing. So really an effort across the entire supply chain has to be done and encouraged by policymakers. And also it's about creating economic viability. At the end of the day, market participants are looking to have margins. So what we need to do in terms of policy is subsidizing new technologies, what we've been seeing, for instance, in LNG bunkering, seen EU backing some new projects in Spain, subsidizing shipping-specific research, for instance, for hydrogen, or even wind power, because we could harness the wind power that is on the ships to have systems of propulsion that work with these. So besides this, you also have green financing for shipping. So the Climate Bond Initiative is currently looking into it. And the third point is really about harmonizing regulation and infrastructure. What was already discussed with regards to the EU emission trading system, while it is a potential solution, it is a bit problematic given the nature of the industry. When you have a shipping market, you need as a ship owner to have options to be able to load and discharge wherever you want in the world and wherever there is demand. So if you have regulations only on some regional waters and not others, it becomes a bit more complicated when you're trying to really make sure the offsetting is working well. And I think any solution in the shipping industry really has to be global. So I'm mentioning already the Traffic Europe white paper, and they are proposing a carbon levy on emissions coordinated by the International Maritime Organization. And it seems quite reasonable that any shipping solution be enacted on a global level. So moving on to the second point, the fuels race, which was already mentioned by Arthur. What options do we have? LNG seems to be the one on the short to medium term that looks the most promising on the basis of infrastructure already being there, as well as regulations and legislation. However, given the methane emissions that LNG production has, we might also consider what's next. What will be the 2050 IMO? Is it going to be hydrogen? Is it going to be ammonia? These also have problems themselves. Hydrogen, before having this as a solution for ships, we have to have this as a solution inland, and only a few hubs in the world produce hydrogen. Ammonia has the problem of storage and has the problem of being quite an unstable element, and as was already mentioned, Lebanon is quite. We'll stay in the minds in terms of potential disasters that we can see with these types of elements. So while LNG seems the most promising solution on the short term, I think hydrogen and ammonia seems to be the ones that in the market have the most yeah, it seems to be the ones that have been picked for the long term. And also, besides only fuels, we can also think about, as I mentioned before, wind-assisted propulsion to reduce fuel consumptions and the related. So I wanted to show you this slide about the Suiso Frontier. It's the first liquefied hydrogen carrier. It is part of a larger project that aims to build an international hydrogen energy supply chain. This ship is currently doing trips on the Australia to Japan run. It is carrying hydrogen produced in Australia and delivering it to Japan. However, for the moment, it carries hydrogen that was produced with the process of gasification, which is fossil fuel, which takes fossil fuel as a feedstock. However, the plan is to slowly move from this gray hydrogen to some greener forms, and Australia has a plan to slowly transition towards this green energy. So this is already a really good pilot project that shows the potentials of hydrogen as a fuel for the future. So what do we have in terms of pricing the alternatives? Already understanding what will be the price tag basically on changing fuels in the industry. So Platts has launched in December 2019 the first hydrogen price assessment. We have 4 different ones. One for gray hydrogen, which is the steam methane reforming without carbon capture. The second one is blue hydrogen, so it's the same process with carbon capture. And the last one is green hydrogen, the last 2 ones, with electrolysis. So we have assessments for the Netherlands, the North America, and Japan, which are the hubs that are producing these. And we're currently looking to expand, and we have decided to be quite forward with this assessment because it's a very liquid market, but we believe that it will be it's booming. It's definitely something that is getting a lot of investments. And we wanted to already kind of give an understanding to the market of the price tag of hydrogen, of how the hydrogen is priced. So for the moment, I was looking for, it seems that the green hydrogen is considerably more expensive, about 3 times more expensive to produce hydrogen from electrolysis than to do some gray hydrogen. But eventually, with the investments that we're seeing in Europe, as well as in the US and Japan, we might see this, this production costs going down. Thank you very much.
So thank you very much, Charlotte, for a quite interesting presentation. And I think you have hit the nail on the head by stating the pricing issue, because eventually this is going to be about cost optimization, and the prevailing solution will be the compliant solution that will be offered at the best price possible. So having said that, I think it is a good time to elaborate more on the topics that you have covered, and the topics that are going to cause quite a strong headache to the shipping industry for the decades to come. And I will start from Arthur, discussing about the cost of the transition for shipping and the cost of decarbonization. So we have seen several studies, and your reference to an amount of 1.65 trillion needed to support the decarbonization struggle in shipping and noting that much of this amount will be heading to bunkering and shoreside infrastructure. In the past, we have seen many regulations that demanded support from the shore industry and ports and port infrastructure not materializing despite low cost, despite capex of quite a lower magnitude. So what makes us think that this time the shore infrastructure will and the shore investment will follow shipping needs? So what is your view, Arthur?
It's a great question. If I'm going to reference the study that Charlotte mentioned as well on Trafigura and the proposal to have a financial incentive and a levy on the bunkers used, that's going to need to be part of the solution. If we take a step back, we need to keep in mind that shipping is a very cost-orientated industry, and no one is going to go for the greener solution unless it's the cheaper solution. Now, what's different this time is that we do have momentum on our side from big oil majors. We've seen this week Shell, BP announce not only job cuts, but a transition towards being called energy majors. So they're also going to help with that cost. And 1.65 trillion is a scary number. It's a huge number. But if you break it down by all the oil majors in the world, all the trading houses, all the ship owners and the ports, it can become much more manageable. And if tomorrow Shell stops trading oil and starts trading hydrogen, well, the shipping industry is going to follow as well. So to answer your question, we're going to need regulations that provide financial stimulus to it. We're going to need a financial incentive for people to switch to the greener solution. And I think we have the momentum of the industry that is also transitioning and will help go towards the right direction.
Okay, thank you, Arthur. And I'm moving on to a different topic for Charlotte. And my question is the following. We have seen a number of studies focusing on the pricing of alternative fuels. And of course, what we see today, if what we see today is the real truth, it will take us lots of time to transit to this new reality. So unless there are incentives in place, pricing will not be on our side in driving the transition forward. So my question would be, in so many studies, we have seen many assumptions as far as forecasting of future pricing is concerned. So what are the assumptions we need to be aware of and be cautious of, especially when we're talking about fuels like hydrogen, ammonia, areas where things are not concrete yet, not mature yet in terms of production processes and scale?
Yes, of course. Well, this topic is actually extremely interesting. For personally our in-house hydrogen assessments, we have already two different sets of assessments depending on different assumptions. So the first one will take into account fixed operating costs for these hydrogen plants. And depending on how you produce hydrogen, you would also factor in the feedstock price. So if it's brown hydrogen, you have to take into account the fossil fuel cost. If it's green hydrogen, you need to take into account the electricity cost, because that needs an extremely big amount of electricity to be produced. So this that's one of the ways we do it. The other way is by pricing what we've seen in terms of trading already, but it's relatively illiquid. So that's why we decided to go for this dual approach. I think that why you're seeing so many different estimates is also because people take into account what will be the government incentives in the future. In Europe, you see that 5 countries have a really strong hydrogen plan for the future. So taking into account these incentives, you can also factor in how much of this energy will be subsidized, and how much this will reduce your production costs as, yes, in general for the future. So I believe this is also one of the reasons why we're seeing very different estimates. It's not necessarily helpful for the industry at the moment, but as more countries come up with bolder plans with regards to a hydrogen strategy, for instance, I believe that these differences between estimates will narrow eventually.
Okay, thank you, Charlotte. And Arthur, do you also have a view on the alternatives and how away we stand today from real pricing of tangible pricing that can be used for investment decisions on alternatives today?
I think an important point that was touched upon there was liquidity. So as the amount of cargoes increase on the water with these fuels, that's going to help with the problem. I actually think it's Bloomberg that reported today or yesterday the first cargo of blue ammonia going from Saudi Arabia to Japan. So we are getting those cargoes on the water. These are going to allow traders to have an idea as to where their price stands, and then of the market to react and increase the supply as the one increases, and help at least with the transparency of that pricing. Now, whether that will be a competitive price point for shipping market participants, that is another story.
Yeah. All right. What about? Have you come across what we call the fossil pathways and potential solutions, technology solutions that can render the fossil fuel pathway sustainable pathway, like for example carbon capture? And so what is your view on these particular solutions, because they're practically competitive to the alternative fuel solution? So Charlotte, would you take the lead on this one?
Yes, of course. So I believe that the carbon capture solution is definitely something that we are going to be seeing in the medium term. One real reason is, for instance, what do you do with all these ship owners that have installed scrubbers, let's say? They have invested a lot. If you think a retrofit of a scrubber is around 3 million for the largest ships, the VLCCs. But however, keeping this 3.5% with a scrubber might not be compliant with the aims of 2030. So how do you balance this, having asked for big investments and then all of a sudden saying, oh, but it's not okay, so you have to scrap your vessel? I believe that carbon capture technologies will be useful for these types of tankers that have already made an investment, but they would definitely need to reduce their carbon footprint to be able to continue operate after 2030.
Well, thank you, Charlotte. Arthur, your view on carbon capture?
Yeah, I mean, it's right. You put a little hat on top of your exhaust, and that gets recycled back into your ship and used as fuel. I think that's definitely a technology that the industry should explore. Also, to think that hydrogen is one of those fuels or alternative fuels that can potentially be produced from that method as well. I think it has tremendous potential, and we can imagine a lot of applications for it to help us decarbonizing the industry.
Yeah. All right. So I will now move on to a different story. We used to talk about the propulsive power, propulsive energy used for shipping. And we as LR, we have recently embarked on a project and granted an approval in principle for an oil tanker design that can be fueled by ammonia. so a zero carbon fuel, but still this vessel will be carrying oil, so fossil hydrocarbons. So the question is, how do you expect this transition to impact the commodity trades that we see today, and what will be the future trades that we will see in shipping? Will hydrogen be part of the equation, ammonia, or other alternative fuels? What's your view? So, Charlotte, I will again start from your end.
Sure. Well, there are two things that are interesting in your question. First is the cargo. Second is the fuel. I believe the fuel we've already kind of reached a sort of agreement with regards to the options that are currently available. Definitely, there are a lot of pilot projects, and at the end of the day, it depends on the costs, which ones will allow you to maintain your margins. With regards to the cargo, that's something that already Arthur was mentioning in his presentation. We have an incredible opportunity now with the renewal of the fleet to also reduce perhaps the fleet. Crude will be, if carried, it will be definitely less of it. Same thing goes for products that are being made from the crude. So I believe that this period that we have here of uncertainty with regards to the future and owners delaying the scrapping of the current vessels and waiting until they decide to place an order is a good opportunity to come with strong regulations and also a strong incentive to the market for them to already order some ships that are fueled with different types of definitely powered by different types of fuels, and also reduce the fleet overall. So I think we're at an extremely interesting point in the market, and definitely something that needs to be leveraged by policymakers as well as industry participants.
Arthur, your view on the same question?
Yeah, no, I agree. Cargo and fuel need to be treated separately, and the landscape will potentially look a lot different 10, 15, 20 years down the line. In terms of the actual shipping trade lanes, as I really believe gas is going to be that energy, transition, and with hydrogen as well, at least what we consider blue hydrogen that comes from fossil fuels. The trade lanes shouldn't change much because, in my assumptions, Asia is going to continue being the bulk of that need for consumption. And if you look at your producing area as well, you've got gas in the Mediterranean, in the US and Africa, where you have crude oil today. So not so much maybe as an impact on the shipping lanes or the voyage lengths, even though, of course, there'll be some small variations there. So we can imagine the producing centers of these new energies to be in the same place. But yes, it completely changes where and how people should invest if you start considering that the cargo carried isn't going to be crude and refined products anymore in 2050.
Yeah, thank you. I have two more questions I would like us to cover. So there is a key question dilemma right now as far as shipping is concerned, and the fuel question, whether we need to have one or two transitions. So what the LNG position in this transition period will be, whether we should opt today for a mitigation, a partial decrease solution, partial mitigation of greenhouse gases solution like LNG, under, let's say, the non-methane emissions scenario, or whether we should strengthen our drive towards the final sustainable zero carbon fuels. So what is your view on that question? What should we do today, and how close are we to reaching one transition solution. So I will start from you, Arthur, this time.
It's a very good question. It raises a lot of interesting points. I think maybe the IMO 2020 recent transition didn't produce the best results. Maybe the pandemic got in the way as well. Maybe the loophole in the regulation to allow for a portion of the owners to go with scrubbers as opposed to others was also a fault on the IMO's behalf. So it's not easy, because if we go down the two transition routes, we may be messing up the first one. So we might as well look at the bigger picture and really dedicate all our energies towards this, especially if it's going to take a lot of time. But in this particular case, I think LNG has tremendous potential. I think when it comes to the already existing infrastructure, a lot of infrastructure can be repurposed for that as well. When it comes to its availability, when it comes to its liquidity, when it comes to the fact we have the technology today, we have ships using LNG as their fuel while they're carrying it. We have ships carrying other things also using LNG as a fuel. So I think in this particular case, LNG ticks all the boxes.
Thank you, Arthur. Charlotte, your view on the one or two transitions question?
Yeah, so I think Arthur summarized the point pretty well. We need to be bold with incentivization. Mitigating, as IMO 2020 has shown, it wasn't that great of a solution, at least for the aims we're setting ourselves for 2030. However, I'm just wondering whether we are ready to implement the full one transition, the big transition now, given the current infrastructure that we have in terms of like bunkering facilities, in terms of production inland. And I do believe, perhaps I'm wrong, but I'm less of a believer of LNG as a solution on the long term. I believe that this hydrogen, for instance, is a better solution, the green hydrogen, of course. And I think we definitely need to move to renewals. Thing is, it's not possible at the moment. We don't even have hydrogen in the grids working properly in Europe. So it would, before having a solution that can be exported to the shipping market, it has to be already inland. So I do believe that, unfortunately, given the level of development in inland infrastructure, it's a bit impossible to think about already moving forward with the complete transition.
Yeah, thank you. So I will have an attempt to have a last question. There was some momentum, some substantial momentum as far as decarbonization and the energy transition is concerned. Things seem to have changed forever with the COVID pandemic. So right now we have practically, apart from the EU activity on the MRV directive, we have a practical cease of work and regulatory action as far as the energy transition in shipping is concerned. We have a number of considerations and meetings and virtual meetings, but not active steps as we speak. So what is your view on the impact that the pandemic will have on the overall effort? Charlotte, do you want to?
Yes, first. Well, I think it's a bit complicated here. Every country is really trying to make the ends meet with regards to maintaining an economy that is working. Definitely, we have seen that some projects that I was just looking at, some renewable hydrogen projects, we had 50 announced pilot projects, and for 2020, And however, we have only seen 32, and they are really at early stages. So there is definitely a problem with investment being delayed here. And I believe that the coronavirus pandemic has definitely had some bad impact with regards to this. However, it has also shown how crude prices have behaved. It has shown that crude prices can become negative, and it really has kind of changed our assumptions with regards to the energy market. So I do believe that it was both a plus and a con, not a plus with regards to infrastructure, but perhaps a plus with regards to how we're facing energy, what we believe will be the future. We've seen a lot of companies recently coming with plans for the future to really green their emissions, basically, like BP or Shell, or even Trafigura with their most recent paper. So I think it has impacted in both ways.
All right. And Arthur, your final comment?
I agree with that view. I think there's two parts to this answer. The first one is that the COVID pandemic has kind of jolted us into a collective realization when it comes to the environment and to what we need to achieve. Now, I think it's also jolted people into a financial reality, which is with the dire outlook right now for crude prices, they're looking at other options because they just can't sustain their livelihoods. So I think the push towards renewables from these companies is motivated financially, of course. And now with regards to your points on the lack of action, well, the problem is it's the uncertainty, right? Second wave, third wave, vaccine, no vaccine. I think as long as we're in this stage, people are going to rather try to manage the situation rather than take any decisive action that can be unraveled depending on what happens. You know, to end on the more philosophical notes, humans collectively do suffer from short-term memory loss. We've seen that throughout the history. So let's see whether they really use this opportunity to change certain things and take decisive actions there, or whether once everything is back to normal, let's say pre-pandemic, whether we just continue like we did before.
Thank you, Arthur, and thank you both for sharing some quite interesting views. So I think this is the end of this session. Thank you again.
Thank you very much,
Thank
Panos.
you.